Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Wednesday, June the 17th, the year's 2020. Let's talk trading. Your method. You have to develop your own method. Now, what do I mean by develop? I don't mean you have to start from scratch and you have to do a bunch of research and figure out and do a bunch of tests and statistical analysis and back testing and curve fitting and all that other stuff. No, that's what I'm not talking about that at all. What I'm talking about is you have to make a method yours. So for example, Walmart took the sweet spots, a simple trade H1 candle color at the line, and he made it his method. He's successful at it, but it's his method. He doesn't trade the same way I do. He's got a different money management. He has different profit targets. Everything's different. But if you look at the charts, yeah, we could trade off the same charts, same indicators, same settings, same instrument. But you have to make it yours. And another method, he uses my dynamic support resistance. He trades it one way, I trade it another. We make it our own method, and that's what you have to do. I noticed there's a lot of traders out there who have gotten my indicators and they want to do the rat. They like the rat. Well, you're going to have to make that your method. You're going to have to learn the nuances about it because it's real easy to, get in the trade, but what happens when it doesn't go your way? What do? You need to know that. You need to make it yours. You need to position size. You need to set the stop loss. I can give you all the parameters, but it might not feel right for you. Just might not feel comfortable. You might not like reversal methods. You might be more of a breakout trader or vice versa. Or you just might like simple horizontal line crosses. Whatever has to feel right to you. But even more than that, it has to work for you because something could feel right and you keep losing, but probably after a while that wouldn't feel too good. So that wouldn't feel right. So whatever method you're picking, using, make it yours. And even more than that, before you juggle three balls, before you juggle two balls, you juggle one ball. There was somebody out there and they were running one of the methods on, like, I don't know, three or four more pairs or something. And it's just like my comment, you know, you learn to juggle one ball when you learn juggling. So when you're trading, take one method, one instrument, and just do it repeatedly. And here's the thing, I'll let you know a little secret. And I've mentioned this before, but if you're new to the channel, welcome. But the secret is this: you learn one method and you trade the same instrument, you do it day after day, and you're making money, you don't need to switch. We talked about milking the cows, milk your cow. That's the same thing. You if you stumble onto that profitable method, don't change a thing. In fact, when Walmart and I first started talking back in February, it's one of the first things I said during our first conversation. I said, if you are successful, do not change a thing. Change nothing. And so what he does is he makes his core, his 10 pips. Once he makes his 10 pips, then he can switch to other methods. But he locks down his core money, and then he moves on. And so once again, you're not Walmart, you're not me. You're you. You have to do for you, by you, with you. Okay? Can't trade somebody else's method. You have to make it your own. Just like Bruce Lee would say, you've got to make it your own. So, as we go through the charts, fellow traders, just remember one thing. These videos are for educational purposes only, and your results may differ from mine. Tradings are extremely risky. You can lose all of your money. So if you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And when you're trading, once again, I don't care whose method, you must have your risk management in place. You can't lose any more in any one particular trade than you're willing to lose. Your money management, you got to take the money when you can, because if you don't take it, the market will take it back. So set your stop loss and position size accordingly. And your brain management. I'm telling you, it's so easy to get sucked into one of these, the regret of getting out the rogo. Oh man, I wish I would have stayed in that trade. I would have made X number of pips. But see, you only remember that when it goes your way. But what about when you get out and then it goes the other way? You don't remember that. You might feel good for a little bit, but trust me, I would bet that you forgot it. You couldn't tell me the last time that happened. Okay. And just like the FOMO, you rush in, even though your indicators didn't tell you to get in or your method didn't tell you to get in because you don't want to miss out. Oh, it looks like it's going, the way I think it's going. And then you jump in. Next thing you know, you got robs. Regretted being stupid because you didn't follow your method. Okay. So just remember that because all that pain you experience while you're trading, all that mental anguish, it's not the market, it's you. It's your reaction to the market that's causing all of that. Okay, on the weekly chart, gaps are all filled. You can see the pound is up 41 pips over the weekly open. It's been moving around a lot today. And you can probably see why here. This is the opening range for the month. And it came down, touched it, and then it bounced back up. And here's the opening range for the week. So you can see right here, it's range bound right here in that opening range for the week. And right now we've got a red day, we've got a green week, a green month, and a red year. So things are kind of crossed there, right? Inside bar, up and back through the monthly inside bar from 2 months ago. And we've got a few inside bar trades here happening. For the day, quiet. We've only got 6 pairs with ranges over 100. And you can see right here that the pound dollar is just below yesterday's low by 1 pip. Maybe it can crack it and come back down. We'll have to wait and see. And buy zone traders, we had the pivot point up here. If you took that buy zone trade here, you may have gotten stopped out or you may have just scratched it. Here again, scratch or stop. Here again, scratch or stop. You see, we just never hit that pivot. And that happens some days. Whoops. That happens some days too. Let me switch this back to M15. It just looks slightly better, I think. And you can see here that the green rats had some feasting. The red rats had some feasting. Rats got fed today. I guess that's the easiest way to say it. And once again, we missed that pivot. Here's the weekly open down here. We almost touched it today. Once again, we missed the daily pivot, but we took out the weekly. Wick zone, in and out, in and out. As you can see now, we're coming out of that wick zone. Price doesn't like staying in the wick zone. Price action. You talk about price action today. If you were a price action trader, H1 at the line, you can just see how you just slaughtered the market. I mean, it was kind of range bound here between, I think it was 40 and 80 about. Yeah. And you can just see this up and down, up and down. Just slicing and dicing across those lines with the candle color. On the smart ranges here, the actually this will probably go out in the next batch of indicators. You have the original smart ranges, but this is the smart ranges all. But it's basically the same indicator. The only difference is this one plots all of the choices of the ranges so you can see them all, as opposed to having to load the indicator up 2 or more times to look at the ranges you want. And we loaded it up 4 times, so we had H1, D1, W1, and monthly. So once again, so for example, with this one, why am I on M5 here? Let's go back to the hourly. Looking at these, looking for these H1 breakouts, making that breakout your own. You can either trade the sweet spot lines or the previous hour high low. And the reason why we're doing this month is because for the new traders here, people who are new to trading, people who are new to the channel, I really want you to do something that's simple yet profitable. Okay, but remember, these videos are for educational purposes only, and your results may differ from mine. So as you can see here, we haven't broken out this hour. So what this is going to teach you, you might have to sit on your hands for an entire hour, like this hour and this hour. That's 2 hours of hand sitting. But if you happen to be in the hour before, it paid off, okay? So chances are it might pay off again. We don't know. But this is the only trade you're allowed to take. You take it with the H1 candle color. If it's a bull candle, you go long. If it's a bear candle, you go short. What could be simpler? You don't have to look at any indicators per se. Okay? You really don't. We just have a couple horizontal lines. It's pretty much self-contained. In fact, I was wondering, let me just show you something here. The TROHL5 indicator. If you scroll down here, see how it has periods or it has my bars? Let's change that to 1, but let's shift it back. So instead of starting with bar 0, we use just 1 bar. So there it is, the previous, high, low, and the open of the previous hour. And so you can see right here, close minus open, we're down 5 pips from the H1 open, high minus low, 8 pips. High minus close is 5 pips, so it's moved 5 pips off the high. Close minus low is 3, that's 3 pips off the bottom. High minus open is 0 because it didn't really go up from the open. Open minus low is 8, drop down 8 pips. High minus previous high is minus 1, it hasn't broken out. Previous low minus the low is minus 10 because it hasn't broken out. Now high minus PM, that's the previous middle. It's 9 pips over, it's between high and the previous middle, there was 9 pips. Previous middle low, there was 0 pips. So that pretty much pinpoints where price is on the H1 range. And D1, you can look at the same thing. The high minus close, close minus low, you can see these are what we look at for the rat zone. You can see we're outside the rat zone because these numbers need to be 20 or less. And actually with the smart rat, which is the same calculation, they need to be about, let's see, on the upside, I think it's 20. On the downside, I think it's about 9 for the smart rat. So, but the difference between here, I'm just using 100 bars. The smart rat indicator, the default is 250, which is a full year's worth of trading days. So that way we look at the entire past year or the entire previous 250 days, rolling days. So we can get a pretty good idea where price is in the percentiles. So, and if you're not understanding the percentiles, it's simply you have different ranges. So for example, maybe one day it's 78, the next day it could be 98, the next day it could be 63. And so you've got 100 of these ranges. Well, you sort them from high to low. And so then you look and see in there, okay, how many of those, when you come up, when the low on the bottom and the high on the top, when you come up, which one does this one stop at? It's like, say you come up, okay. Well, there was 36 that were below 38 pips. It was 38 pips or less in this high minus close when you sort them out. So that's how you use these percentiles, because the bigger the number or the smaller the number, you know that you're at an extreme and it's either time to get in or get out. So that kind of wraps it up for today. So fellow traders, just remember, no matter what method you use, make it your own. Okay, so it's your method, nobody else's. Because remember, it's not what you trade, it's how you trade it. So go out there, drain the banks. And if you're new here, please click subscribe. And everybody, click the like button and the share. And tell everybody about this channel. Rumpled One